Okay, we're going to have a look at the purchasing system. We're kind of moving on now in terms of implementation to the starting point when you're trying to persuade people that they should undertake IPSAS, showing them what the benefits are to the point now when they've made the decision that they want to go with it. We're also in this procurement section going to be looking at accruals-based IPSAS. So we're going to be looking at this idea that our accounting system be it IPSAS, and remember this idea, for those of you who've watched the earlier parts of these things, that I'm not really a big fan of this word IPSAS. I like this idea of an accrual-based accounting system that gives us good information. I have to say that, you know, when you very first start these projects for the very first time, your impression of this, oh, magic, you know, we're going to get into some really interesting stuff, and let's look at the herd basis for biological assets and so on. The reality of it is that you fly in, and then within about 2 days of you arriving, you end up sitting with a lady in the purchasing department. She's pointing at a screen going, I'll buy some paper. If I order some paper at the end of December, this is what happens. What's going to happen under IPSAS? You will have from that cursory question absolutely no idea what she's talking about and no idea what's going to happen under IPSAS either. And the reason is because probably to begin with you don't speak the language, so it's coming through a translator and they don't know what questions to ask. But this is the kind of things that are coming out. So this is what we're going to do now, is we're going to go through and look at the things that happen with a standard purchasing system, because your purchasing system will cover your expenses. Now remember, there is no accounting standard under IFRS or under IPSAS actually specifically for expenses. So let's just have a little look at the slide. As it says at the bottom, please remember to download the workbook, because the workbook covers all of these slides. This is not, I think, a long topic compared to some of the others, so hopefully we can get through this fairly quickly. We will be returning to it in almost every presentation afterwards, because from the government's point of view, if you look at it very simply, it does two things. It receives tax revenue and it spends money. That spending of money is your purchasing system, and you know what they purchase is enormous. So let's have a look at what we've called here our historic accounting system. Your historic accounting system is almost certain to be cash-based. I don't think I've ever come to any country that's starting this process that didn't start from a cash-based system, though you may find that they've bolted on some accruals. Now it says here that they're going to purchase an asset, so when they purchase an asset they will show it as an expense. So I hope therefore that there's going to be no difficulty there. So you show assuming that you're doing the country, you show your tax revenue as your income, underneath you have your expenses, and there will be all of the assets for all of the different ministries. You know, so obviously your ministries of property and your ministries of defence are going to be much larger than things like the Ministry of Finance. It may be that there are some sub-ledgers that show assets. It will depend where you are and on what country you're in. As I said, mainly if you're working in countries which are former British colonies, then there will be, because the British accounting system required you to keep those asset registers way back 100 years ago. And again, if you're in a former Soviet country, then the Soviets will as well, because in the Soviet Union they had asset registers where they kept assets and they depreciated them. Right, in other countries you'll just have to look and see. I have to say that when I started life in the United Nations, the United Nations did not keep sub-ledgers of assets. So there was an ERP system. Some offices had them in the ERP system, some had them in Excel, and some didn't. And it was a huge joy, because we had to clean and codify these things. So getting a message from an office that I have an asset, what do I do with it? What is it? Oh, it's the box at the back of the photocopier room. So you're having conversations like this. Right, historic accounting system. We purchase an asset, we show it as an expense. It may be that there are some sub-ledgers, and it may be that we disclose in the financial statements. If the financial statements are disclosed at all, who knows? But that's your starting point. Now let's move on and look at the actual procurement system itself. So the expenses, which will go into your income statement, or your statement of financial results as it's now called, will come into that statement through the procurement system. So your procurement system is the system by which you buy, and as you are buying goods, the system itself is sending information away to the accounting part of your ERP system, and that is logging these things as expenses. Right, so you understand how the thing works, where the controls are, and how your ERP system works. You need to map out the purchasing system. Now, the procurement system. Now, if you're in a decent, up-to-date office, you'll find that they've done it already for you, and you can get it from the IT department. If not, you need to do it yourself. But it shouldn't really take very long. It is worth saying as well that at a procedural level, most governments are very, very similar to commercial organisations. Where you get the variation is the fact that individuals in commercial organisations can normally choose. So you'll have an approved supplier, and as long as you buy your goods from the approved supplier, they don't bother too much. Governments tend to be much more, there have to be 3 quotes, and then once you've got your 3 quotes, then blah, blah, blah. And they put much more effort into it because of this idea that they are the custodians of public money. So a standard purchasing system, therefore, will work in the sense that we start with a requisition. So let's assume that we have someone in the Ministry of Education and they need a new computer. So they fill out a requisition form. So there will be some form. If it's a computerized system, so it's Oracle or something, there will be a requisition center. They click the requisition and it goes to their manager. Someone will be designated as approving manager for requisitions, and they will click the approval. Assuming that it's been approved, it then goes to raise the purchase order. So the purchase order will be raised by someone probably in a purchasing department, though you may have little cells of people. Sorry for that. We've had helicopter buzz over and now we've got the police outside. We're near Sing Sing prison, so my expectation is that someone has escaped from Sing Sing prison again. So your purchase order is raised, and once the purchase order is raised, this will include, therefore, well, in fact, the requisition will include all of your accounts information. So which account does it go to, which project does it go to, which office does it go to, which ministry does it go to, blah, blah, blah. So you get your strings which come there. The purchase order will be raised, and then it will be approved by an approving manager. And in addition to that, at this point, it will be budget checked. You may actually find that the requisition is budget checked, but certainly the purchase order will be budget checked. Assuming that it's approved by the approving manager, what it will do, therefore, is it will freeze funds at that point, because the purchase order is an order which goes to the supplier. If you're in a city like New York or London or somewhere, in fact, it will go by email to the supplier, and you'll have an email link. If you're somewhere where suppliers don't necessarily have computers, then you may have to print the thing off and walk around the corner and deliver it by hand. So let's just stop and see what we're happening there for. We've got a requisition. The requisition is raised and is approved. And those are your controls. So you've got 2 people approving the requisition of the goods. It goes to an independent individual person in a purchasing group. Be they a purchasing group in your office, be they a centralized purchasing group. Many governments keep centralized purchasing groups, so they could even be literally thousands of miles away from where the thing's needed. The purchase ledger clerk will raise the purchase order. They will get if it's a solid ERP system, the requisition will contain all of the accounts information, so all your different codes, so which office is it, which account code does it go to, blah, blah, blah. They then raise that, and it will go to someone to approve. Somewhere within that process, from requisition to purchase order, it will be budget checked. So it will check against the budget. Now your budget will have 2 things. It will pass budget check if it meets the lower of 2 numbers. One is available budget, and 2 is available cash. So the budget says we have money to buy this, and the cash is in the bank. If you don't have either of those things, it may be suspended. Often in government purchasing systems, the budget exists, but we're waiting for cash to be released. The Treasury may release funds on the first of the month to each of the ministries. So therefore, it will fail budget check, but it will sit in a queue, and then when the funds are available, it will automatically process. In other more simple systems, like the UN, you have to reprocess it, but then they don't have this idea of releasing funds like that, or when funds are received from donors. You've got your purchase order. So your purchase order is a document. It'll go to the supplier, either by post, either physically, by courier, or if you're lucky, through email. The supplier will then fulfill the process, so they will deliver the computer to wherever you are. and delivery will be receipted. So it's supposed to be two completely different people. So somebody takes, in the office there will be an asset or an item receiver. That person takes the goods, and then the person who originally raised the request will receipt the goods in your ERP system. So each stage of those steps, you've got two different people. Two people approving the requisition, two people approving the purchase order, and two people agreeing that the thing's been delivered. And if you're very lucky, and of course no one ever does this in real life, if it's a computer or something, you should check that the thing works at that stage. Assuming that everything goes fine, once the receipt comes through, the receipt will go back to your purchasing group, who will be separate, and they will approve payment. Right, that, I think, if you just stop and think about it fairly slowly, is a fairly obvious process. Someone requisitions some goods, the requisition is approved, it goes to a central purchasing group, the central purchasing group raises the documents to purchase it, the computer's delivered. When it's delivered, we then issue the payment. And each step of the way there should be two people, and we try to have big gaps between these people physically and so on, so that you can't have two people who are just ordering computers and then selling them in the market. Right, that is your purchasing system. Under your historic accounting system, you need to know how that works. You need to know how it works because remembering that everything in the future is going to go through the ERP system, so you need to know where to put your controls. So do we ensure the credit worthiness, if that's the right word, of our internal controls? Really, the other thing, the question that you must be answering is, at what point do we get in our income statement an expense? Because under the original cash basis, therefore, at what point do we get an expense? Now, I can't tell you that because it will vary from place to place. In places where I've worked, when the purchase order is raised and approved, at that point, funds are frozen. So in other words, your computer costs $1,000, there's $10,000 in the bank. Even though we don't transfer the funds out, the $1,000 is frozen. So therefore now, going into the purchasing system, it will show that under that budget code, you have $9,000 left to spend. So your money is frozen in your account there at that point, and all it can be used for is to pay for that computer. Now that happens at the purchase order point. As far, therefore, as your expenses are concerned, if that's the case, can you see, therefore, that we've got an approved purchase order and it's now an expense in our income statement? It has not been spent. The money is still in our bank account. Now, with that, you get two issues. Issue number one is a genuine practical issue. What happens if the computer subsequently doesn't get purchased? It doesn't get purchased because the delivery company doesn't have any computers. It doesn't get purchased because we discovered that this one didn't work because it was plugged into the wrong type of plug and now it works, so we don't need another one. What happens? Those funds are frozen in your system. So you have to make sure, therefore, from a practical point of view in the purchasing system, that if we are never going to use that purchase order, that the purchase order gets cancelled, and therefore the requisition gets cancelled as well. And that, because otherwise those funds will sit there. And what will happen is that at the end of the year, you'll be sitting there with $500,000 in the bank, but you can't use it because they're all related to purchase orders, and they're related to purchase orders which will never ever be used. So that's the first thing that happens. At what point are we getting an expense, and what's happening with our purchase orders? The second thing, and this happens not only in governments, this happens in commercial organisations as well. The use it or lose it. The use it or lose it applies to budgets. Therefore, you have $10,000 to spend on computers, you're getting close to the end of the year, and you realise that you haven't spent your money. If you don't spend your money, you don't get it next year. Hence, use it or lose it. So what do people do? They raise purchase orders for computers. If you've got a good relationship with the supplier, you phone the guy up and you go, I'll raise a purchase order, you'll get a purchase order, but don't send me the goods, just hold it, okay? And the guy will do that for you. And this happens all over the world. And it's not just governments, it happens in commercial organisations as well. So you've got your purchase orders. Right, when that happens, therefore, once we get back to the 10th of January or whenever, you phone up the guy and you say, I don't need them anymore. And you cancel the purchase orders and you cancel the orders. What's happened, therefore, is that you have an expense in the year one, but it's not actually an expense. Now, you need to understand what happens in your purchasing system. If you had $10,000, you order 10 computers and don't take delivery of them, what happens to that $10,000? Usually what happens is that your computer system, your budget system, automatically carries it forward as a credit into the next year. So your budget is increased in the next year by $10,000. You need to know that. So you need to find out what's happening there. Right, that's something else that happens with purchase orders. You're going to be spending a lot of time talking about purchase orders. Right, other things that happen with purchase orders. We raise a purchase order, we send it to the supplier sends the goods to the office, and then the person in the office pays it with some other different kind of payment tool, what we used to call in the UN non-PO vouchers. So in other words, they pay for it with a check. So they give the guy a check. Now what's happened is that you've got a purchase order raised, you've got a delivery and receipted, but the guy's been paid already. So you need to work out what's going to happen with these things. Is he going to be paid twice? If he's not going to be paid twice because the request for payment was never submitted, then we're sitting now with an outstanding purchase order. We've got a purchase order, we've got a delivery, which means that we've got a payable. Under IPSAS, that's going to give you a payable. Yep. Right. Something else to look out for, therefore. Look out for, therefore. Yes, of course. Right. You need to understand that process, how it worked before, and you need to understand how it's going to work afterwards. In your accrual accounting system, which may or may not be IPSAS, it is almost certain that we will recognize the expense at the point of delivery. Because legally, once you've taken delivery, the asset is yours. So therefore, legally, it's going to take place there. You need to understand what's happening with these purchase orders, therefore, so you don't have items which are missed and you don't have items which are double counted. So you're going to have to go through a big purchase order cleanup process and get rid of your purchase orders. One organisation I worked for, we had purchase orders that were open going back 20 years. Someone had gone away on a business trip, raised a purchase order for expenses, for whatever reason they'd never been paid those expenses 20 years ago. Now under IPSAS, suddenly it's sitting in your system as a payable, and it's 20 years ago. Those people are gone, never coming back. So, clean up of your POs and look in your purchasing system what's actually happening here. So, continuing on. First thing, as the slide says, and it may sound kind of obvious here, but I really do want to stress this, you need a completely new procurement system with the appropriate reports, which are going to give you the information, what's gone into your expenses and what's not gone into your expenses. Now, assuming that you're using Oracle or SAP or whatever, the procurement system will come with a standard set of reports. It's a bit like buying a motor car. You know, it comes with certain features, and if you want other features, you have to pay extra for them. You can download the books, you know, the tutorial manuals and the books for the ERP system we had, which was called PeopleSoft, Oracle PeopleSoft. It's all in the internet. So go look there, get them out there, and when you're talking to your IT guys, go through with them the reports and make sure that what you're building will produce those reports. And they shouldn't cost you anything. They're included in your basic package. In other words, you've actually paid for the things. When you're looking at your old system and you're looking at your new system, you're going to have to draw up some kind of list of the things that can go wrong, which is a checklist of potential errors, and then fix them. But as an overview, what are you looking for here? It tells you there, if implementation is the 1st of January, liabilities at 31st of December include approved requisitions not delivered. Right, from our last slide, you saw therefore in your historic accounting system, in some countries it may even be at the requisition stage, but more likely at the purchase order stage, what's going to happen is their expenses. So let's assume we raise $100,000 worth of purchase orders, but those goods haven't been delivered. Under your old historic system in 2014, they will be treated as expenses. Then under IPSAS, when the goods are delivered in 2015, they will be counted as expenses again. So you've got double counting of your expenses. So the question therefore is, what do you actually do? Right, under the first time adoption rules which are going to be coming out, your opening balances at the 1st of January are supposed to be IPSAS compliant. So you need to take that double counting of purchase orders out of your opening balances. So there'll be an adjustment. We looked already through your IPSAS adjustment account. So there will be an adjustment there to take them out of previous expenses. And it will go to your IPSAS adjustment account. Then we will treat them as expenses, as proper expenses in 2015. Using the same logic, Using the same logic, therefore, if you have items which were delivered in 2014 but unrequisitioned until 2015, you're going to end up with double counting of them as well. And that happens as well, particularly, if you've got people in remote offices a long way away. So you got to work the coin, work both sides of the coin. Right, it says therefore, point number 3, if departments are judged on cash expenses, how do we calculate that? The basis of calculation will change. The most important thing is that we use a sensible and logical system. So go talk to the people. They're obviously going to have a vested interest in introducing a brand new system which improves their performance and therefore increases their bonus. But you need to get through these transitions. If you don't, you will find that people will work around them and you will get caught. And then you will have mistakes, and God forbid they're picked up by the auditors. So therefore, if we do have people who are judged, and we do have people who are judged in many governments on, if they're a procurement department processing procurements, what's going to happen afterwards now when suddenly the purchase orders have been processed, but because the goods haven't been delivered, they don't feature in their results, and so their performance is going to drop down by 1/12 for the last month or whatever. So make sure, therefore, that you understand what's happening. Finally, if you have at the 31st of December requisitions, but the goods arrive in 2016, which budget will they be matched with? Will they be matched with 2015? Will they be matched with 2016? You have to be careful with this because we have this idea of use it or lose it. If the answer is 2015, what will happen is that people will just raise requisitions to use up their budgets in 2015. But they won't raise the purchase order until 6-7 months later. That will give you problems in terms of when your accounting periods are closed as well. So look therefore at what's happening there. If the answer is 2016 because the goods are delivered in 2016, then that's kind of fair enough, but you need to know that the people know this when they're starting. If they start to try and order goods in 2016 and the year just doesn't open, which is what will happen with most accounting systems, then you will find you have some very, very unhappy people. You also need to think that you don't want them ordering goods and taking delivery in 2015 just on the off chance that they might need them. Yeah? You need to make sure that people are actually buying goods when they need them. Okay, it's just a reiteration of this point that you must understand the historic system and the new system and how it's going to work in the ERP. At what point do expenses go to the income statement? Because you're going to have double counting, or you're going to have holes missing, or you're going to have people, assuming you've got a calendar year, in and around December furiously working to use up their budgets. And everyone does it. It's not just governments. So this final little slide, I did say this was a short topic. It kind of is a short topic in terms of the fact that these slides are short. There's only 4 of them. But we are going to return to this and return to this and return to this because procurement is just such a massive area as well. So just a couple of other little things. Right, in terms of procurement, therefore, try and make sure that you implement a procurement catalog. A procurement catalog, therefore, is something inside of your ERP system. If you want to buy a motor car, you click on motor car and it will fill as many of the boxes as possible. I think, we've all been sat in front of computers and the computer system won't do what we want it to do. The box is grayed out. You're trying to enter something, it won't take it. Massively frustrating, but on the other hand it's done for a specific purpose, and it's done to force you to put the information into the computer in such a way that the computer system understands what it's getting and it doesn't spit out 500 pages of error reports. The trick therefore is ensuring that during the testing you use actual procurement staff. Oh, God forbid, and so many people don't do this, but you actually do the testing and you do it properly with proper test sheets, and they come up with a list of things which don't work and so on. Getting test teams set up is just absolute poison, particularly because you usually have to do it on Saturdays. And people will just go, yeah, I came in, I did that, and it worked. I'll do it from home, and it works fine. Then, of course, they sit down and find that if they want to buy a motor car, that they have to put it in as a nuclear power plant with a cost and then a write down or something to make it go into the system. So, procurement catalog. Procurement catalog gives you a list of items and then you push the button for the item, and then it will populate as many fields as possible for you. Do not, if at all possible, give people the chance to enter their own descriptions of goods, because you will just get the most amazing things, the most absolutely amazing things. And keep your procurement catalogue nice and tight as well. There is an international customs list of goods which runs to some 60,000 items, and it smacked very much of a consultant who'd been stuck in a room by his project masters and left there on his own. So there were 11 different types of avocado pears, of which 8 are experimental, 3 different types of camel saddles, and so on this thing. And on one meeting I went, there was one place that they were going to adopt this as their procurement catalogue, and it was just impossible for them to use, particularly so many of their staff struggle with English. So keep your procurement catalogue nice and short, nice and tight. Yeah. Right, in terms therefore of bringing in your accruals, because remember we've got procurement and we're talking about the kind of things that will have accruals. So things like rent. If you're Ministry of Education, you have a number of offices, and so therefore you should have either accruals or prepayments for these things. What I really strongly recommend that you don't do is take accruals way down to the ground level. When we're looking at the structure of our organization and the structure of our accounting system, you will remember that we talked about this idea of using the budget structure. Pick a point in the budget structure which is relatively high up, so some kind of regional state level, state being a state within a country like New York or something, and put your accruals at that level and just calculate them within the grounds of reasonableness and materiality, but count them on a broad level. If you start trying to teach people who are accountants in schools how to calculate accruals and so on, again, they're pretty smart, they'll pick it up okay, but it'll just be a total mess, and then someone will be on holiday, they won't do it, and then someone here, they'll get their friend to do it for them, and then this person won't realise that it's just for 1 month, they'll do it for the whole year, and the whole thing will just become disastrous in terms of the results that you get and in terms of organising the training. And usually not because of the fault of the people in the schools, just because there's so many of them, how do you get to them all? So keep it nice and central if you can do that. This idea of putting your accruals in, your expense accruals in at a regional level. Leases on buildings are a big one, so your property management people have to get on top of that. But again, that's what Excel spreadsheets were made for. We put our accruals in at the regional level, but where possible, make assumptions that, and if you can put this into the policy, it calms down the auditors as well. Your opening accrual is the same as your closing accrual. If you got rent, you would expect over time that rent would rise, so that isn't particularly true. But if we're assuming that all you're looking at, therefore, is the difference between the opening and closing accruals, so therefore if it's relatively small, i.e. the magic word's not material, it won't make any difference at all. The fact that you're making an assumption on this is probably less likely to give you a material error than if you give people the right and let them do it themselves, because you don't know what you're going to get back. There'll always be a couple of guys who didn't come to training because they were sick or because their boss wouldn't let them go. So therefore, as it says on there, watch out for documentary evidence resistance. So this is where your auditors are going to play hardball and demand all of this evidence. But in principle, you should be okay. And do that with as many of your expense accruals as you possibly can. Inflation currently is 2-3%. So that's what we would expect. Secondly, if you're not sure about this, then just automate. If you're going to put your accruals in, you think, well, then maybe it is material, well, we should put a couple of % increase in a year, then do that, but just automate it. In terms of your ERP system, get your ERP to do all of the work. If you had a cash basis before, there's actually no reason why the move to accruals for expenses changes anything in a standard procurement system. If you're purchasing, some packets of paper or something, the guy is requisitioning 10 packets of paper, there's no reason why that screen in front of him should change. The requisition therefore goes up to the purchasing department at local level, wherever. There's no reason why they should change either. Yeah. And if we're going to do this thing where we just assume that any opening and closing accruals are immaterial, then there's nothing has changed at all. So you don't need to train. You don't need to make them worry. Their job doesn't change. They don't need to get stressed. Automate as much as you possibly can. The only thing you do have to do is you have to document the automations. make the automations for the IT team and don't document them, and 5 years down the line, you'll see these things coming through, but no one will have any idea what they are and why they are. When the head of your finance section leaves, and of course no one bothers to ask him about this stuff, and he doesn't do handover notes or briefings, suddenly people are going to be sitting scratching their heads going, where does that number come from? And it comes from the ERP system. So, good documentation, and make sure that documentation is available. Okay, that was a really short little section there on procurement. It is a short section, but it is massively important, because procurement and expenses, and there are no IPSAS and no IFRSs on this, if you can get that to work, then all of your expenses in your income statement are going to be correct. And if you can make some assumptions about your accruals and you can automate them into the system, you're taking the entire procurement section of your staff, which is actually in reality a very large chunk of your finance staff, over half of your finance staff, and then nothing you need to do with them. Their job stays the same, their expectations stay the same, but you've got your accruals inside the computer. Okay, thanks for listening. I should do the speech, shouldn't I? You know the stuff. Like us on Facebook, love us on YouTube. Any questions you have about implementation, or you think some of this is wrong, or something that's just urgent to mention, yeah, send us a message. We love speaking to people. We have a steady number of 50 people who send us messages now, so join the club. Come and join us. Thank you. Gotta go get my lunch now.